Welcome back, everyone. My name is Fignoli Ismay, and I'm here with my IronFX team member, Mr. Angelo Zidis. We have so much to talk about today. The economic world is going crazy today. We have Mueller report. We have Trump tweeting affecting the market. We got Brexit and May out with her luggage ready to go, and we still have the Sino trade. But today, we will be focusing only on the Eurozone and its overall economic pictures. So please feel free to send your comments and questions to our live chats that we have right now as the webinar proceeds. And our analysts will be happy to reply to any queries you might have. Without any time to waste, let's start off with our first questions for my friend Angelo here. Angelo, what is the recent course of and current condition of the Eurozone right now, economically speaking?
Well, the Eurozone economy has been decelerating in 2018. It's continued this deceleration in the first months of 2019. They've had some deceleration in inflation rates also.
Okay.
These are some negative things. But there's some doubts on the actual inner strength of the Eurozone's economy, which is it's worrying, and it's something that they could contemplate on. But there's also a lot of exogenous matters that are affecting the whole view on the economy, like the US Sino or the global economic slowdown or Brexit, things that are interfering with just leaving the economy to relax and just leaving
a healthy economy.
Yeah. So we do see some negative figures, but there's also some outside figures that are just around the corner interfering with the whole picture, I would say.
Affecting it.
Yeah.
Okay. All right, fair enough. What are the key financial indicators of the Eurozone economy, and what is the message they are sending to us at this point?
All right. I don't want to be loop-sided and say that this is negative or this is positive. I'm just going to give some readings that I believe were good and some were negative, just to make some small conclusions. Okay. Starting first with the GDP, as we said, GDP has dropped on a year-to-year basis for the Eurozone in quarter four of 2018. It's dropped from 1.2 to 1.1.
Okay.
And we've had retail sales very in the opposite, increasing. For January, retail sales were up from minus 1.4 to 1.3 positive on a month-to-month, and on a year-to-year we're up from 0.3 to 2.2, which is positive. Two readings that are positive. Retail sales are up.
Okay.
Now,
if retail sales are up, that's good news, isn't it?
Of course. Okay. Then we had the employment change, which has gone from 1.2 to 1.3, so a little bit more job, not a significant jump, but it's also some positive indication. But then we have, as I said, inflation. Inflation is dropping from 1.1, the core CPI, to 1, and this is a year-to-year February preliminary reading. This is kind of a negative, and then we move to a more specific economies like the Germany's economy with some negative reading of the manufacturing PMI dropping from 4.7 to 44.7, 47.6 to 44.7, and then we've seen French manufacturing also dropping from 51 to 51.5 to 49.8. These are just some readings that show the current picture, though. Mm-hmm. I do not want to stand on these and just say like this is negative. This is just a moment of the overall course.
Okay.
This is not what is happening or could happen in the future. This is a small time frame with some negative readings.
Okay. Now, these negative readings regarding France, for example, which is the second largest economy in the Eurozone, right?
Yeah.
Do you think it may have something to do with the friction going on with the government and the yellow vest and so on and so on?
It does have things to do. That interferes with the growth, because it sends out a lot of inner fighting and it interferes. It's said that one of the reasons that is holding France down could be the protests.
This situation. This situation. I hope they solve it pretty quickly. We need a healthy Europe. Which are the strongest economy in the Eurozone, do you think?
Yeah, we have to start with Germany first.
Yep.
Germany has had a solid job growth rate, creates more jobs, and it also has a higher minimum wage, which keeps their employees happy. Wages are satisfying, and they are the biggest economy in the Eurozone. They are a good indication of what is happening. So we put them in the number one position. Then we have to go to France. Now, France GDP has increased from 0.9 to 1% on a year-to-year basis. But as we said, demonstrations with the yellow vests and could be bringing the economy a little bit down.
Affecting them.
Yeah. These are the biggest players in the Eurozone.
Now, let's go back the other way. Which are the weakest link of the Eurozone economy, do you think?
I don't want to start with the weakest. I want to start with the
most problematic one?
Yeah, the bad boy, which is Italy. I think Italy is a bad boy because it has a huge economy. It's the third largest economy, but they have this Italian budget which is out of control. And the thing is that the EU, their government has said that they're not willing to follow and respect the EU rules on what they've said on their budget. So you have a strong economy that's opposing the Eurozone, and this creates dangers. This creates because they have the economic backbone as an economy. They're strong enough, but they're not willing to compromise or to be in talks.
Create frictions among the other ones. What's to say? The other ones say, okay, well, if Italy can do it, why can't I do it?
Exactly. The Eurozone is basically either could follow Italy and let them be as they, but then, as you said, could backfire as why don't you do that for all economies? Why all economies should be in line except Italy? Or you can oppose them, which is a double-edged sword basically, because they if you oppose them, they will be creating more problems and you have more instability. Or you can try to compromise, or you can
negotiate in some sort.
But then I have to the weakest link could be Greece.
Let's talk about that.
I think that Greece has had extraordinary tough conditions for its bailouts. Their GDP in 2018 was 25% lower than it was in 2007. That's 10 years ago, more. That's 11, 12 years ago. So you understand that as economy is supposed to be growing steadily or having some difficulties, but then continue to grow. They've been going backwards.
They're going backwards, even after the bailout.
And they've also had some problems with employment. They have had a huge unemployment rate. And the unemployment rate is worrying because a big percentage of the unemployment rate is young people. So what future are you creating? What are you creating here? And how does Greece is basically holding down the Eurozone economy?
That is huge. We have that many young people out of work, and subsequently maybe they migrating other places.
People are looking for better standard of living.
They have to. I mean, they're sitting there and not making anything. They have some of their parents who rely on them, and so on. Of course, they have their own future at stakes as well.
Definitely.
So I hope they find a solution. Maybe they need a different government. I don't know. Somebody who can actually make some changes. So anyhow, What are ECB's target and limitation
Yeah.
at the present time?
That's a very accurate question because of the timing of the question. Mario Draghi mentioned yesterday in a speech he had, the ECB president said that they are aiming towards, and they're seeing the economy move towards the 2% target of inflation. Inflation is product prices increasing, which sends a positive message because as an economy grows, prices grow. You cannot grow prices when the economy is going backwards.
No.
So they're trying
People couldn't afford anything.
Yeah. So they have this target of 2% and they are aiming, at least they have a goal and they know where they're going, which is positive. Their limitations is that they have an uncertain economic environment.
Okay.
They have Brexit looming.
Okay.
And they've had, and it's said that they have economies in the European Union that they're not sure if their stance matches the Eurozone stance, which is not, it doesn't create unity, it's the opposite of unity.
Yeah.
So that's one thing. And a limitation they've also downgraded their GDP growth rate to reach 1.1% on a yearly basis, which is a bit negative. But these are all forecasts.
Yeah. Just before we move on to the next questions, I just want to touch base on Greece again. Going back to Greece, their economy is it based mostly on tourism, or is it based on somewhat on manufacturing? What is it based on? Their GDP?
They've been into tourism. They have a lot of tourists coming because obviously Greece is beautiful.
Lots of antiquity.
Yeah, they have good weather,
Yes.
so they're into farming and
Okay.
agriculture.
Okay. Manufacturing anything?
Well, manufacturing, I'm not sure.
Okay. Yeah, I'm
But
trying to
as I
see-
said, the most important is tourism and agriculture for
Yes.
sure, because I know that they've been given money from the European to use.
to improve.
Yeah, to improve, especially these sectors.
Yes, yes.
So, I don't know if they used it correctly or
Properly,
wisely,
Yeah.
but they have definitely the potential.
Yeah.
They have good weather. They have they have things going for them
Now I'm
if they
trying
use
to
them.
think regarding farming,
Yeah.
agriculture. It's not a very attractive thing for young people. Agriculture, I don't know if they become a scientist or something, biology, whatever. But that could create another issue for them as well. If this is what they're pressing, and then you're attracting more like the 30-something, the 40-something to enter these areas, open businesses, open farming, whatever, because they're more patient. But the younger folks, they probably more want something different, like, I don't know, manufacturing or something. Would you think?
I would say that the agriculture, if you have money to invest,
Yes.
it could be a serious business, and
Yes.
it could be interesting also.
But we just said that the European Union is giving them money to push these two sectors, so they have some money at the bank that they can loan out at low interest rate to people to make these things get better. So they're not going backwards; they're moving forward.
Well, it depends on the people taking the opportunity. Not only having the opportunity, you have to take the action. So
Maybe he goes take along by a few Mercedes. Who knows? Okay. Anyhow, let's move on. What at this point is the ECB monetary policy stance, you think?
yeah, in the closing of 2018, December the 13th, the European the ECB basically stopped their asset buying program. Okay, they've stopped it, and in the latest meeting in March, they very surprisingly introduced the new TLTROs. The TLTROs are long-term loans that they will be given from time to time, and they want to increase lending to businesses and growth. They want to create like businesses for people to work and bring money from other
Create
continents.
jobs, yes.
Yeah, and create this this flow
Yeah.
of jobs and money coming in and out and
A
using
happy
money.
economy.
Yeah, so they're making this. This is the TLTROs are basically targeted long-term refinancing operations. They're like the monetary policy tool. They use this to like create value. These will be made from September 2019 every quarter to 2021. So they're giving a good time frame, 2 years, and they're like they have things going for them.
Okay.
I see it positively. I'm an
Okay.
optimist on this.
Very good. Very good. Glad to hear. Okay. Now, coming to the so-called global economic slowdown, we keep hearing this word all over the place. How has the Eurozone been affected by this, and what measures have they taken, if any, to counter the danger?
Economic slowdown is something that creates more fear than results.
Okay.
All right, fear is a negative, some kind of negativity spreading, even though some things have not been confirmed yet. However, ECB Mario Draghi said yesterday that in case they see something that's worrying,
Yes.
they will postpone their hiking interest rates.
Okay.
All right, so that's one thing in line. But another interesting thing that they will be getting in the next months, the next year, in the Eurozone, is that they could possibly be creating a unified joint budget. If this thing goes in place, for me, you are setting a good foundation for the next years, for the next 10 years. All right. Because this is a discipline of saving money. If you create a small budget and it starts building up, you have money on the side, which creates you some confidence.
Yes.
It gives you opportunities, it gives you options, but you're also saving in case something comes up.
Yes.
You have the money there.
You have a safety net.
Yeah. But if you have money, usually you keep building it.
Yes.
But when you don't have money, usually you're looking for it.
You're bored.
Exactly. So that is a very good thing that the European Union has had as a measure to counter any future uncertainty.
Okay. This is good. At least they have some people in charge that's actually looking forward. It's very good. How does Brexit affect the Eurozone? What is Europe reply to the latest update? I'm hearing kind of many things. I'm hearing Boris Johnson, a Trump brotherlyhood. He wants to support May, but he wants May to go.
Yeah.
I mean, what kind of support is this? I mean, is he serious?
They haven't. It's in a deadlock. The situation is in a deadlock with Brexit. They haven't decided yet what's going to happen. But Theresa May, basically, she's understanding that maybe they don't want her there in that position.
If she listened to me last week, she would have known this. I have to say, I told you so. Okay.
The thing with Brexit is that there is this forecast that if they leave, the Eurozone's GDP is going to drop significantly. All right. It creates some kind of negativity, but again, it's a forecast. It's not confirmed. It's not confirmed. I believe the Eurozone could survive. Could be okay.
I'm sure the Eurozone will survive. Okay, but the thing about it is that you have a collective right now putting their joint forces together, working together. Of course, they're an economical powerhouse. Yeah. Well, you take one out, okay, a huge one out. Of course, you're going to feel the effect. Okay, it's going to take you some time to build it up again. Am I right or wrong?
Yeah, it is going to have an effect, and it could be having an effect on a very weak point of the euro, because the euro is currently the Eurozone is in a difficult situation at the moment, and they have this Brexit at the moment at the same time.
Everything's happening at the same time.
So it's hard, but that's how you grow. You grow through the hard moments.
Yeah.
I want to say that they have other countries in the European Union, like like Poland, like Sweden, like Czech Republic, like Hungary, that have their own currency.
Okay.
They're not under the euro. They don't have the euro as a currency.
Okay.
And they're sitting back and they're observing what's going on with Brexit, and this. Just observing makes scenarios in your mind without even understanding, like
Negative scenario.
negative or positive, like if I was to leave, or if I could leave, or how would I be, how is my position in the Eurozone,
Yeah.
and do they have the significant, like, do they have the influence in the Eurozone as they want to have? Do they see themselves leaving, or maybe it creates other scenarios that people have not been thinking about, but other countries are being quite thinking about, because maybe their stance as an economy does not fit the Eurozone. So it creates other questions for these countries that are not using, like the UK, which is not using the euro. They have the pound. Remains to be seen.
Yeah. Sort of like a married couple, they decide to get a divorce and live in the same house. Take each side of the place. You do your thing, I do my thing, right? I don't know how it's going to work out. Anyhow, let's move to the European stock market.
Yeah.
What is the current trend in the European stock exchange, do you think?
I would like to speak about Germany's DAX and the French one, the CAC 40. They've both been climbing in the latest months. They've had a positive course, but some negative readings, like we said before, from Germany and France, both have had some, you can see it on their charts, that in the last 4 months they've been moving up, but they've had a small correction because the negative news is interfering. But these negative news is also interfering with other markets outside Europe. So it's kind of strong listening that manufacturing PMI in Germany is dropping, or France's manufacturing PMI is dropping. It creates a reaction in other markets.
Yes.
So the effect is harder on these indices.
Okay. All right, that's good. Good. Do you believe that there are some European companies in mind that could be of interest to our viewers in terms of trading is concerned?
I would go to Germany's banks, Deutsche
Okay.
Bank and Commerzbank, in
Okay.
talks to have a merge, joining
Okay.
forces.
Sounds like a good thing.
Sounds like a good thing. There's benefits, and there's some things that should be considered before making this. First of all, it's optimistic because they could be creating this, solidifying the banks in Germany. Germany is the biggest economy, is strong. It's good to have a solidified bank system.
Wouldn't that be a monopoly?
It could be. It could be. But it is said that this merge is to cut down on costs.
Okay.
All right. Funding costs.
Okay.
This comes with, they're saying that 30,000 people could lose their job if this merge takes place.
30,000.
That's a lot of people. But you have
It's
to,
not just 30,000 people. What about their families? They all lose their job as well.
Yeah.
So we're talking affecting a huge amount of people, and and doing this venture.
listen, if you have a long-term plan for, let's say, 5 to 10 years, you have to make some sacrifices.
Okay.
In order to move in the direction, you have to change, you have to be different, change yourself. So
Okay.
this merge could be setting a long-term plan in place.
Yes.
It's just not now. So 30,000 jobs could be more, it could be less. We don't know. It's a forecast, but it could be this that you have to sacrifice in order to move, in order to grow, strengthen, and that's two important banks. We have to say that European banks have not been doing so well in the last year.
Okay.
So this could be a way to strengthen.
Making them more healthy at the cost of
economic.
firing 30,000 people. let's be honest here.
It's,
okay, and then they'll turn around and give the CEO a freaking bonus of 13 million. Well, 30,000 people have them. Let's get it clear between you and I. I mean, seriously
but
speaking.
they can expand the banking sector in different ways. They
could take it lower. I mean, don't fire 30,000 people. How about maybe 5,000 now, 5,000 next year? I don't know.
That would be the ultimate best scenario.
It's like I'm 50 pounds overweight. I want to lose it yesterday. It ain't gonna happen. I want to. You have to make some kind of plan slowly. Yeah. And don't just. Just drop people off the face of the earth. They're going to affect their families and everything they do in their daily lives. But anyway, that's something that the decision they have to make.
One more company is BMW.
Okay, one of my favorites.
Yeah, BMW has made a negative forecast for 2019. They have saying that this could be a difficult year for them. They're also preparing for some sort of turbulence. They're saying that their aim is to intensify. Also, this also has to do with cutting costs. There's some models they had in plans to bring out. They're not bringing out these models. They want to save their money. They want to stay compact, stay together, and wait for maybe 2020, 2021. BMW is a worldwide company, creates awesome cars.
Big.
They can survive any, they have the strength to survive. So their stock has been down this year until now. But this could be also due to maybe the US bringing out tariffs on automobiles made in Europe. This could be like a protection of what could happen, and if they do better, then they've done better.
Right. I mean, recently I've heard of Fiat Chrysler, another major company, Italian-American company. They were talking to Peugeot of a merger. That would also be very big as well. But maybe BMW should be thinking about maybe joining Mercedes.
Superpowers.
Creating a superpower. You know how big would that would just be big, And they could save a lot of money from that and then regenerate their plan. I think that's a good idea. I'll give them a call and see what they think about it. What do you think? We should call them, right? Okay, we give them an idea. Now, let's see. Do you have any, we talked about the European companies already, yes?
Yeah.
So, if we could move to politics.
Politics.
Let's talk about politics. We're not going to talk about Trump. It's not my favorite. Anyway, what are the positions in the EU? What are some positions in the EU, effective position in the EU that will be replaced in the near future that could affect the economy one way or the other? How important is their influence in this?
As a young analyst, I would say my approach would be thinking of replacing somebody important is exactly the same as replacing a CEO in a company.
Okay.
The new CEO has the potential of creating more value, increasing the share value into billions.
Yes.
If he has the experience, if people know him, if he's capable, if he's that sort of personality. So the question is, who will be next ECB president? Mario Draghi is stepping down in the near future. There's some names thrown out there like Erkki Liikanen. He's the Finnish central bank chief of the central bank. He's been in this position. He has experience. He knows how to deal with struggling economies.
Yes.
Another name thrown in is French governor François Villeroy de Gaulle, who is also France's central bank governor. He's also very experienced.
Okay.
They are saying that his approach is favored by Draghi. And then we have Benoit Cœur, which is basically, he's in the ECB's main ambassador. He's in the ECB, but he hasn't had this kind of position. These are just some names brought out. that are important, because the ECB's president will have an effect on Euro stock markets and
Lots of
the
policy
currency
decisions, yes.
and everything, and his personality. But also another person leaving is European Commission President Jean-Claude Juncker, which is a very tough negotiator. He's the person to go to when you need something difficult to happen.
And equal to Yellen.
He speaks to the US, he speaks to Asia, he speaks to China. He's the person, he's a tough negotiator. He's negotiating Brexit. He's a strong personality.
Yeah.
He gets things
Sounds
done.
like a fair guy also.
So these two people are most important people standing down, and maybe it's a good thing that they're leaving, because the EU needs
Powerful figures.
needs change.
Yes.
In a
It
difficult time.
That's very good. Get some young people in there to do the job.
Yeah.
Let's move to the euro. Where is the euro compared to the other major currencies at this time?
Yeah, I would like to move to the chart. For the euro.
Okay, very good. Very good. Now, what are other relationships does Europe have with other countries, and how do the financial markets react to those ties?
For me, the thing that stands out is the EU's relationship with Japan. All right, they've created this partnership agreement, and it started on the 1st February 2019. This removes barriers. They're setting their own high standards and shared values. This is good business, business. And a time that we're seeing a lot of back and forth going on the U.S.-Sino trade wars, they basically made a good agreement. It's very positive. Numbers confirm that the EU is exporting over 58 billion euro worth of goods to Japan, and another 28 billion in services.
Wow.
So they have this interaction, economic interaction, and this thing,
it's a good thing.
helps them both. It helps them both, and they're sending a message towards the other big players in the world, like the US and China.
Yes.
That they could be rejecting protectionism.
Yes. Yes. I think everybody's sending a message to them. It's, again, it's strength and numbers. Okay, when you stop being protectionism, then you're talking about rejecting everybody else, and you want to be by yourself. Not necessarily a good thing. Any suggestion to those traders out there?
Yeah. The first thing I would like to go into is being patient on trading. Trades do not manifest immediately. It's very hard to get a trade that will manifest immediately and get to the price that you want it on the same day, on the same hour.
Yes.
Some trades need time. Some trades maybe need 3 weeks. Some trades maybe need 2 months. If you have a strategic plan with the euro, and you're seeing some kind of you have organized your thoughts, and you can see in which direction the euro could be moving, you could make good money on the euro.
Yeah.
You could make good money. And well, keeping your volume in check, keeping your margin level in check can give you opportunities for day trading.
Yeah, short term and long term.
Yeah, if you see opportunities arising, you can jump in or use it to your advantage. But be strategic and patient.
Have a plan.
Yeah.
It just reminded me, I had a client a while back. I remember, I think it was 2008 when gold was selling for like $650, and this guy was a VIP guy. Of course, he deposited like $100,000, and he just he kept dumping money into it, And I think it was like maybe 2009 or 2010. You know, he ran them for a long time, and the gold was selling like 1,200 or something. 1,250. This guy just cashed out. I don't want to say the number, but
small fortune.
Yeah, he had a decent fortune, not just small fortune, but he made out well. The guy knew what he was doing. Again, he if you look at it back then, he had a plan.
Yeah.
Okay, he was patient. Okay, he was not, quickly decisive to shorten out as soon as you see trouble coming.
Yeah.
So this is the kind of thing that our traders need to do. Okay, have a plan. Okay, a daily strategy of what is it that you want to do. If you want to be a day trader, or you want to be a trader that's going to be going for the long term, choose your path and then stick with it. Of course, on this side, we will be doing a lot of things to help you out as well. As IronFX wants to provide in-depth analysis to boost your trading, we will be providing these seminars on a weekly and monthly basis on various topics. For more information and trading ideas, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, and of course circle us on Google. This is Fignoli Ismay once again from IronFX with Angelo Zitis, my colleagues, wishing you solid trading. Have a good afternoon.